Today, Bitcoin closes out its best week in more than a month. We get the official documents detailing how the Trump-backed DeFi platform World Liberty Financial works. And Crunchbase's Chris Metinko discusses trends in third-quarter VC funding for Web3. As of noon Eastern, Bitcoin rose 1.75%, trading at $68,700. Ether also climbed, trading at $26.50, while Solana traded at $154. Now, crypto markets made gains throughout the week, outpacing broader U.S. markets. The uptrend comes as the U.S. presidential election nears the finish line and after the European Central Bank cut interest rates for the third time this year. For the week, Bitcoin jumped 9%, Ether climbed a little less than 8%, and Solana rose more than 6%, all while the S&P 500 climbed 0.75% in the past week. Okay, let's talk about the top stories. The Trump-backed crypto project, World Liberty Financial, released its white paper, or what it calls the World Liberty Gold Paper, yesterday. The document contains new details about the project, like the Trump family's allocation of the WLFI tokens and to what extent they're involved. A disclaimer at the bottom of the 13-page document shows that 22.5 billion of the tokens are reserved for the Trump family, and they can take 3/4 of the project's net revenue. It also indicates that the former president and his family are not directors, employees, managers, or operators of the business. The platform's WLFI token launched earlier this week for accredited investors, aiming to raise $300 million. Well, as of this morning, the website shows a bit more than $13 million worth of tokens sold, still a far cry from its goal. Of course, all of this comes just weeks before the presidential election, where the former president has been positioning himself as the pro-crypto candidate in what is projected to be a tight race against Vice President Kamala Harris. CNBC reached out to World Liberty Financial, but didn't hear back right away. We also reached out to the Trump campaign, who referred CNBC's question to the Trump organization, but haven't heard back yet. Next, a Nigerian court has hit pause on the trial of Binance exec Tigran Gambaryan due to illness. That's according to Reuters. The court reportedly pushed his trial to October 25th so he could get medical attention. Since his detention, Gambaryan's health has reportedly been rapidly deteriorating under custody. Nigerian authorities accuse Gambaryan, who's a U.S. citizen, of laundering more than $35 million. He has been held in the country since February, and both he and Binance deny the charges. All right, for our main story, Crypto World's Jordan Smith spoke to Chris Metinko, senior reporter for Crunchbase News, about the outlet's new report on Web3 VC funding. They discussed the latest trends as deal sizes rise from a year ago, but the numbers of deals done face a second straight quarter in decline.
All right, Chris, your report found that Web3 startups raised around $2 billion across around 300 deals. And I think there are sort of two ways to take this report when you look at it. You know, on the one hand, the dollar amount has risen 43% compared to a year ago, but it's down 12% compared to last quarter, ending 3 consecutive quarters of growth there. I guess break down for me how you see the latest Web3 funding report that you've put out. Is it good news for the industry, or is it more bad news for the industry?
I think, like a lot of things that have to do with Web3, it's kind of a mixed bag, really. I wouldn't get caught too much in the dollar amount. I think that when you look at the dollar amount, the good thing, if you're an investor in Web3 or if you're a Web3 enthusiast, I think the fact that the industry is really kind of stabilized. We've seen basically just around $2 billion invested quarter by quarter. And so I think that might be good news for a lot of folks. But the deal decline, this is the third quarter in a row that we have seen deals decline. And I guess just to maybe put it in perspective for you, this was, I think, the lowest amount of deals completed since, I believe, early in 2020, which is really right before the industry exploded. And at the height, I think there have been quarters where there have been almost 1,200 deals completed. So we're really kind of at a quarter of what we were. There's obviously two ways of thinking about that. One is that investors have become maybe they're doing a little bit more due diligence. They're definitely maybe analyzing some of these companies. It's not kind of the euphoria and the FOMO that existed at the height of Web3 back in like 2021, 2022. The downside in the, there are the downside, I think some people overlook when deal flow really starts to lessen, is that, we're seeing less seed fundings, less angel fundings, less pre-seed fundings. And, that just means there are going to be less companies that now are going to be looking for that Series A, Series B, which are larger, and then eventually the larger, growth equity rounds that, are $50 million plus. You're just going to have less candidates for those kinds of really large rounds that can really boost the dollar figure. So, like I said, I mean, I think it really is a mixed bag. I think the one thing that you can take away is that it does seem like funding and venture dollars have really stabilized in the industry. I think that deal flow is definitely something you have to keep an eye on.
Yeah, you mentioned the mixed bag there, and how much of that do you attribute to macro issues? Talking about economic uncertainty, higher interest rates, even if we're starting to see cuts, and how much of that do you attribute to a Web3 specific confluence of factors? Because Web3 has its own hype cycle, and we're back to sort of normal levels for 2020, as you mentioned. It's not as much of a topic of focus. So do you attribute that trend toward Web3 losing interest, or do you attribute it to the macro environment?
I mean, I definitely, I think some of the macro issues really have an effect on Web3 and investing in Web3, mainly because it has a large effect on crypto, right, and kind of crypto enthusiasm. The high interest rates definitely issue. I think the election plays an issue, as it plays an issue in everything, and also, just like you said, also just kind of around the world issues and tensions and problems. I think that crypto is definitely one of the industries, when you look at startups, that are maybe affected even more greatly than a lot of others. I think that plays a big part in it. However, there are other more kind of I think localized issues in the U.S. that are helping crypto. We haven't really talked about ETFs. That's a huge issue. I think the ETF issue is shown investor enthusiasm to have and be exposed to crypto without actually owning it, and the approval of those ETFs, I think have really kind of brought back some of the investment to crypto. And I think, we just saw yesterday kind of the enthusiasm around stablecoin, right? With the potential Stripe deal with Bridge. Payments of stablecoin are kind of going through the roof right now. We just saw, I think earlier this month, it was Visa announced a stablecoin. I mean, you're getting these large fintech players, financial service players, that are very interested in offering digital payments, digital payment avenues to folks, and that's only going to bring kind of more investors into crypto in specific, and Web3 in general.
Yeah, that kind of goes to my next question, which is just what types of projects are getting the most attention? Because if you listen to Wall Street after the ETFs, they're really focused on tokenization, tokenized assets of some kind, the eventuality of tokenized securities, and those projects are getting a lot of attention from the firms that have money. But that doesn't necessarily always touch Web3 or this future that we were talking about 2 years ago, when it was NFTs and blockchain gaming and things like that. So where are the projects at right now that are getting the most focus from VCs?
It's funny. It's very Web3 like in the fact that it's kind of all over the place. There really isn't a single concentration. Some of the larger rounds, just in this quarter alone, were regarding kind of blockchain security around IP. There were a couple of large actual investments in the metaverse and aspects like that in immersive technologies. I think the one thing that we are kind of seeing is definitely a concentration, though, on kind of infrastructure plays, layer ones, that kind of thing. That really still brings investors out. And I think that, those are kind of the long-term investors. Those are the investors that are that understand kind of the picks and shovel aspect to Web3 and everything that needs to be built out first before Web3 can kind of be, maybe everything that it promises to be or promised to be. So again, it's one of those things where you're definitely seeing investment spread out in a wide swath of Web3 technologies and projects and gaming and whatnot. So it's really hard to put a finger on, and it also, to that extent too, I think in a lot of these rounds that we're seeing too, it's I think we when we look at some of the investors in Web3, you think of kind of maybe Andreessen Horowitz and folks like that have always had really big plays. They have really large funds dedicated to crypto. But and while they're very active, don't get me wrong, you're also just seeing players kind of from all over they run the gamut of larger firms, mid-range firms leading large rounds. It's not really just concentrated on a handful of firms or growth. Not a ton of growth equity players really play a huge role right now in Web3. I think a lot of folks are kind of still sitting on the sidelines in that realm to see what happens here, and it probably might make deals years down the line. But you're just also seeing just kind of the investment spread over a wide swath of investors also.
Okay, that's all for Crypto World this week, and we'll see you then.